नमस्कार साथीहरु, वेलकम अल अफ यु टु माई च्यानल। आजको डिस्कसनमा हामी चाहिँ मुख्यतः अपरेटिङ एसेट्स एनालाइसिसको बारेमा छलफल गर्नेछौँ। एन्ड दिस इज द भेरी इम्पोर्टेन्ट च्याप्टर अन्डर द फाइनान्शियल अकाउन्टिङ या यु क्यान से द्याट एनालाइसिस अफ अकाउन्टिङ इन्फर्मेसन। अब बेसिकली हामीले भन्ने हो भने अपरेटिङ एसेट्स भनिसकेपछि दोज एसेट्स द्याट्स अ लङ लाइफ्ड एसेट्स विच आर युजफुल फर आवर बिजनेस, ongoing business, which are not held for resale purpose. Okay, that is the basic types, is the meaning we see that. And types of operating asset could be tangible or intangible. We say that tangible भन्दाखेरि we say that land, building, plant and equipment, yeah, machinery, etc. And what about the intangible, like your goodwill, patent, trademarks, franchise, like that. So tangible assets, let's see the you could touch it, you could feel it, but in case of intangible assets you just perceive it, like your, for example, you are using the branded watch. Okay, that means you might have a psychological benefit here, so still that is the intangible assets for your business. Okay, now look at your next concept, friends, that is all about acquisition cost of tangible assets. Now what we say the acquisition cost, for example, तपाईले के गर्नुभएछ भने you purchase the equipment, yeah, plant from importing from the India, and you have to bear the cost associated with the importing, like your custom duty, yeah, we see that transportation, installation charges of that plant, then that is simply we see that acquisition cost. For example, when you are going to buy the land, then we say that we have to pay the commissions to the broker, then we have to bear some professional fee to the engineer as well, right, to just check the overall quality of the land, like that. Then that is also the part of acquisition of land here. Now remember, friends, if you are given like your financing and the marketing cost, which would not be the part of acquisition cost. Now let's move to the, what about the depreciation? We say that depreciation, friends, is all about non-cash expenses, right? Is a, it's very important to show our true picture of the financial, true picture, or you can say that financial position of the company. So we have to consider depreciation, we need to estimate it properly, right? Then what about the depreciation? That depreciation is, being the non-cash expenses, even while preparing the income statement, we have to like deduct from our overall revenue part, is we deduct cash expenses including non-cash expenses. And what about the accumulated depreciation? This is all about, for example, you have used machine for 4 years while its life is 10 years, then you would be calculating your depreciation over the 4-year periods, then that is called accumulated depreciation, and that will be reported in the balance sheet, right? In balance sheet, what do you do? From the fixed assets, we will be deducting the accumulated depreciation. Now what about the book value of the assets? This term you need to clarify here, that's the acquisition cost of assets, yeah, machine, whatever, is noted by V. And as I discussed earlier, that is the acquisition cost of the tangible assets is noted by, that's a V, minus accumulated depreciation. Now let's move to the methods of charging depreciation, friends. We have a different approach of estimating the depreciation, like your for on-grad level, straight line approach, diminishing balance method, production unit approach, yeah, double decline balance method. Today I will be just discussing the two approach here. One is called a straight line approach, and next one is called diminishing balance method. Under a straight line approach, friends, this is simply, you can say that V minus S by N. V is your acquisition cost, S is the scrap value or residual value, N is the useful life of the machine, we say. Okay. Now V minus S is called depreciable assets value. Okay. Now over the like annually, what would be the amount of depreciation? Then you would be using this equation. Now I will be illustrating the one example here by using these applications. Let's see, I assume that our value of the asset is now, this is 5 lakh, okay, and its salvage value, okay, that's a 10%. Then duration is the 10, that's a 10 year, we say. So what would be your annual depreciation charges by using a straight line approach? If you click it here, then you will find your annual depreciation charges would be, if our salvage value is 10%, that means the 5 lakh 10%, that is the 50,000. So that is the 4 lakh 50,000 divided by 10. So you would have a depreciation of how much? 45,000, even by using formula or by using this application. I thought why not to discuss this application. This is interesting one to show you the figure at a time, and it would provide you the overall calculation. Now nature of a straight line approach is that you can see here over the life of the machine the depreciation amount remain the same, while look at the book value, friends. Book value is that keep on decreasing. So you look at this, its calculation here. So this is our opening value, this is annual depreciation charges, and each year our annual depreciation charges remain the same because of being a straight line approach. So our at the end of the value you would have a just how much value we have? 50,000, which is just equals to 10% of the salvage value. That you need to understand here. Book value and the salvage value will be the same at the end of the year. Yeah, that's the closing value. Okay. Now let's move to the, and that's the next concept here, that is diminishing balance method. Then under diminishing balance method, simply you need to understand here, that is the what we do here, rate of depreciation into book value of the assets at the beginning of an accounting period. That is the concept that you need to understand here. Now suppose let's illustrate the one example here. Suppose a company has bought a car on January 1st, 2023 for Indian rupee 5 lakh with 10 years its useful life, and the residual value expected to be Indian rupee, that is 24,000. Now remember, in this question we don't have the rate of depreciation. So your question is about what would be your first your rate of depreciation, and what about the second question, what would be your annual depreciation charges here, and what about the book value of this car, right? You can say the car at the end of the 2024, and what about the gain or loss on sale of this. You can just adjust calculation here, then also record the journal entry here. Now for last question we say this is gain on loss on disposal of car at the beginning of 2025 if it's sold for 2,80,000, also record the journal entry, friends. Now let's move to the discussion on the its concept. First of all, here we don't have the rate here, so you need to follow this equation. Okay, now rate of depreciation you will find by using this equation, right? Then you can see our rate of depreciation would be, you can say here, that is the, as I mentioned here, that is you can use the bracket here, 1 minus our salvage value. If we don't have the salvage value, you cannot use this equation, friend. That is the 24,000 divided by our value of the car is 5 lakh, and it's whole to the power, it's 1 by 10 means that is the how much? 1 by 10 means that is 0.10. I would use directly. Now this is my rate of depreciation. If I would multiply with its let's see the 100, then it will provide in percentage figure, right? Okay, now let's move to the, okay, approximately I would say that is the 0.26 0.262 means 26.2 is that. Now what about the your rate of depreciation? We solve it. Yeah, that is the 0.262, that is 26.2 here. Now what about your annual depreciation charges as per the like diminishing balance method here for 2023 and 24? Then remember, while finding your depreciation, our value of the car, how much is the 5 lakh here as per given questions. So your annual depreciation, when you calculate it, then for the first year, that means for 2000, you have purchased the car for January 1st, 2023. So simply that your value of the car is 5 lakh, and into that rate just we have calculated. So your depreciation is that 1,30,942. Now even accumulated depreciation for this year it would be the same, 3,130,942. Now what about its book value, friends? Book value is simply this cost minus accumulated depreciation, as I discussed the earlier concept. Now what about the depreciation charge like you're in 2024? That is basic concept is that under diminishing balance method, what do we do? Book value into that diminishing rate, we say rate of depreciation. Okay, so we say that this our book value into rate of depreciation. Look at this is different from the straight line approach. Under a straight line nature, annual depreciation will be the same, while in case of diminishing balance method, yeah, we can say that the reducing balance method, your depreciation amount keep on decreasing, right? Because as your book value of the car also decreases. Now what about our accumulated depreciation, as we uh, do in statics as well, like your this plus like cumulative frequency, you can do it. So what about the book value here? So again you back to your original value, this minus total. Okay, this is our 2,72,407 is my, I came to know that this is the simply our book value. Now, so I solve these questions. B number is that is the annual depreciation charges. We calculate it, right? Now for C number, what about the book value of the car at the end of 24? The book value of the car at the end of 24 would be that is 2,72,407. This way you could conclude it. Now what about the gain or loss on disposal, or you can say the sale of car at the beginning of 2025, or that is the at the end of 2024. So you can see here this is our 2,72,000, right? This is 2,72,407 here. So simply what do we do? We have to calculate all required in working notes here. So you would have a loss or gain. Look at your sale value. You would be realizing 2,80,000, while your book value at this date is 2,72,407. Therefore you can say that your gain on sale of car would be how much here? Gain on sale of car would be simply you say that you are selling for 2,80,000, okay, minus this book value. That means this is your gain. Gain would be how much here? So this is gain of 7,593. Now the next question is that since you would have a gain of gain on sale of car, that is, so how you would be recording the journal entry here? So you say the journal entry would be simply what do we do here, friends? That is the you can say that this is the cash account debit. How much cash would be realized? That is the 2,80,000. Okay, that's a 2,80,000. Now what about our accumulated depreciations? Accumulated depreciation, we already calculated required information, that is the two accumulated depreciation is that 2,27,000. Okay, I will just copy here, and what I do here, I will, if I do the paste, it would not be pasted here. That is the 2,27,593. That is the, you can see here. Okay, I would use here, that is the 227,593. Okay, now this is our accumulated depreciation. Okay, now what about the, we have a gain here, by the way. Gain of how much? Gain on sale of car, you can see at disposal of car, we have a gain of how much? 7,593. Okay, this is our, we see that this is 2. You can see this is the 2 part. Gain on sale of car is this one, and whatever we say that what is the value of the car, this is our value of the car to car account. You can say car account, we have how much car? that is 5 lakh. But important point is that, friends, your look at your accumulated depreciations. Cash we have realized is okay. This is 2,80,000, and I would just organize this information like this. Okay. Okay, this way you would be recording your journal entry. Now you could check your overall, that is the this when you add it, then your debit must be equals to your credit side, friends. Okay, friends, these are the things that I would like to share today. I believe that whatever I discussed today about the concept of operating assets analysis part, that will be the input for all of you for your examinations. Yeah, overall understanding of depreciation concept, book value, accumulated depreciation, including the journal entry analysis, friends. Okay, friends, thank you all of you for watching this video. Please take care, all of you. Thank you.